Hello, welcome to the Stockout. This is your show at FreightWaves for all things related to CPG and retail industries. I'm one of your hosts, Mike Baudendistel, joined by Grace, Trailer as a Service, Sharkey. I didn't know about trailers as a service until you wrote it up. But I
well, and
guess
then I
what is
just
that? What are trailers as a service? It just means that you can. It's like a full service lease of a Wabash trailer.
yeah. So, well, it's almost more of the capability of being able to have trailers and assets available uh, at on demand, right? So if you're maybe power only and you need to grab from a trailer pool, or even more so if you have one of their trailers and a breakdown occurs, or you're traveling across country, right? Then that's and you see that maybe there's a situation that you'd want to switch out trailers, then that's there for you. So I love that you read my work because I read yours too, Mike, and so that makes me feel good inside. There's a lot of stuff we put out, and you never know who's hitting all of it. So thank you for that.
Exactly. I mean, sometimes I write something and I'm like, I don't hear anything back. Like, was this helpful? Is there any feedback? But that's interesting. So it would like someone like Wabash would have to set aside a certain number of trailers in order to have those kind of in reserve and sort of enough places so the people that are subscribed to the trailers as a service have
Yeah,
those when they need them. That is pretty creative from the world's biggest, or at least North America's biggest trailer manufacturer. Used to cover that company when I was a stock analyst. It was always kind of a volatile one, actually. There's a picture of your um, article, but yeah, go encourage people
yeah.
to check that out on the site. So some of the things we have to talk about today in the world of CPG. I guess one other question is that targeted at all at shippers that have a private fleet? Since this is a
Uh,
shipper oriented show.
right now, it's actually more of a little bit, if anything, focused at logistic providers and brokers who maybe are working with these larger accounts and want the ability to offer shippers that value-added service. So
Mhm.
I think that's where they're starting right now. FreightWaves, they've brought it up a couple times in their earnings, is one of their biggest partners in that space. But I think it's this like aftermarket arena for OEMs that's going to be a big topic, I
Mhm.
think, moving forward. And Wabash, that's why they rebranded, and they're really focused on kind of the future of what an OEM is going to contribute to logistics.
Yeah, trailer manufacturing is extremely volatile. I mean, it's kind of just this boom and bust cycle. So anything you can do to smooth out the revenue seems to be really beneficial. But moving on to
Yeah.
CPG and retailers, some of the topics we have to talk about today go through a little bit of Unilever and Procter and Gamble's results. Unilever reported this week. I think Procter and Gamble was the week before that. Thought there was some good news in there. And then you talk about Unilever scaling back its ESG plans and whether that's part of a larger trend or not. The declining birth rates I thought was interesting this week, seems like that happens every year, but I think it really has big implications for CPG. So I think it's something that is
Sure.
a good thing to be reminded of every year. And then we can talk a little bit about Wayfair, which is opening a brick and mortar store in an area that I'm really familiar with, the northern suburbs of Chicago, and Amazon expanding its grocery delivery. So we'll talk about whether we think those things are game changers. We'll do that in about 20 minutes. But before we do that, if anyone's not already signed up for the Stockout newsletter, would invite you to do that by going to www.freightwaves.com/the stockout. It's going to be right up at the top under FreightWaves, and hope people go there and sign up for the newsletter, and then also use the discount code to join us June 4th and 5th in Atlanta for the Future of Supply Chain conference. But want to move on to the first topic here. Unilever and Procter and Gamble highlight falling inflation. So Unilever has been one that's lagged Procter and Gamble in terms of stock price performance the last few years. Come under some activist pressure. They have a new CEO. They announced a restructuring. They first reorganized the segments and then said they were going to sell or divest in some way. The ice cream business, we still don't know whether that's going to be acquired or it's going to be taken public, spun off. It's kind of up in the air. They announced a lot of job cuts. So a lot of turmoil, I think, internally at Unilever, it appears from the outside, but investors seem to like what they're doing so far. The stock's at a 6-month high. and had a good week, this week. And some of the highlights from the earnings call is that sales growth of 4.4%, which that's sort of excluding acquisitions, I call it underlying. And then all 5 segments had sales growth, and volume was up 2.2%. And the rate of inflation has come down to where the pricing increased an average of 2.2%. So it's kind of a welcome relief, I think, if you're looking at this from sort of a macroeconomic standpoint, that some of these items, and that's a stock chart of Unilever in the past, let's call it the past 6 months since October. And so that's the highest level it's been, during that 6-month period. And then you see in the past, week or so, went from about 46.50 to 51.50. So, investors have liked what they've seen the last, last couple of weeks. If you look at the sort of that longer term stock chart, what it shows is that Procter & Gamble. So Procter & Gamble stock is in blue. This is just a relative chart, and then Unilever is in black. Unilever is down 15% over the 5-year period. So that's really rough when the stock market has really surged during that period of time. And then you see Procter & Gamble in a lot of the same businesses. Procter & Gamble's outperformed, and I think that's really what's prompted maybe the restructuring here. They're focused more on cost control now. Sort of all those things. And it seems like, at least what so far, they're sort of focusing in on these, I guess they call them billion-dollar brands, or sort of these sort of name, flagship brands that represent about 75% of the sales, and they seem to be getting a lot of traction with those. And then when you turn to Procter & Gamble's results this week, similarly, their pricing increased 3%, so a little bit more than the Unilever, 2.2%. And their total volume was flat. And there does seem to be a big difference sort of with consumer behavior, with Procter & Gamble specifically, between the U.S. consumers, which they say are not cutting back, not really changing their behavior in terms of what brands they buy, not really trading down to cheaper brands. And then some of the emerging markets where there's more of that shift into private label. So Procter & Gamble does tend to address a little bit of the higher end, part of the market for a lot of its brands. I mean, some of those brands might compete directly with Unilever, some might not. But they seems from their perspective, the U.S. consumer is holding up, and I think it's kind of encouraging that the rate of inflation in some of these consumer staples is less than the overall rate of inflation. Any other takeaways that you had from these?
Well, the one thing I want to hit too that I think you and noted as well is, and this I think is especially we see that this brought this up last week. The teenagers that are getting into skincare too, Unilever saw a nice increase in of all of their sections, beauty brands as well, especially skin care in particular, brands like Tatcha, which. This is a perfect show to actually have a male and a female on, because I can give a little bit more perspective on that. Tatcha is a really good skincare brand, and it's a brand that if you're gonna, it's well deserves the money you're gonna put down for it. Others like Life Proof, which is also gets into hair care too. They saw increases in those, so I think that's a little bit of the tween aspect coming out of that. But I also want to note too, in times like this where you might want to splurge a little bit, but you can't feel like you can splurge on, of course, like a home or some of these bigger items we talked about last week. Well, there is something called the lipstick index, where you see women in particular spending money on some of these more smaller purchases, but more on the luxury side, right? So you might say, hey, you know what? I can't afford a spa day, but you know what I'll do instead? I'll upgrade. I'll buy the Tatcha moisturizer or one of their skincare products, and kind of treat myself in my own home that way, right? So I think we're seeing a little bit of that like lipstick index type of purchasing, especially at Unilever in particular. So I was excited to kind of see that, because there's a couple of trends that I think we've seen in the purchasing space, on of course in the lipstick index, and then of course with tweens that definitely came out. They saw a 7.4% increase in those items in particular, in beauty and well-being overall.
So that's interesting, and maybe that makes these companies more defensible than they otherwise would be. Something like Unilever, do you think of consumer staples as being defensive and not terribly cyclical, but it almost introduces, like the way you're describing it, kind of almost like kind of a counter-cyclical um, you know,
Yeah.
method in there. So I thought that's really interesting. Great to have that perspective. The other thing Unilever talked about here, and this was maybe our topic of the show, is Unilever scaling back its ESG target. So you go back a couple of years, and the ESG got to be a fever pitch. Every company's investor relations page or just had a dedicated section on ESG, and I think ESG might have reached its peak when Philip Morris was making the claim that it should be considered an ESG company. And I guess the reason that it was considering ESG, they thought they were an ESG company was because they had certain products that would help people stop smoking, which it seemed to me that Procter & Gamble is the reason, or Philip Morris is the reason that, and Big Tobacco is the reason ESG exists. But now the companies seem to be scaling this back. There was a kind of a Wall Street Journal article last month that was kind of, you want to call it prescient. It was basically said that why ESG investing may never recover. A large part of it was that a lot of the ESG investment funds have underperformed. A lot of these companies that are investing in things like solar power, electric vehicles. We've seen the electric vehicles really struggle with consumer demand, sort of despite how much money the government is putting toward consumer vehicle or electric vehicles. And with Unilever, I do wonder if the fact that there's a new CEO, all these other changes gave it leeway to scale back on some of these initiatives. So I have a few examples here. So in terms of the plastics, they previously said they were going to reduce virgin plastics use by 50% by 2025. Now they say it's a 30% reduction by 2026. They said that they were going to, previously said they were going to have 5% of its workforce made up of people with disabilities. Looks like they got rid of that, bullet point completely. That probably didn't make a whole lot of sense. They sort of eliminated this pledge to spend 2 billion euros on diverse businesses across the world. And a lot of these things are just really hard to define. I mean, what's a diverse business exactly? What's a disability exactly? Does it have to be something that's, visible? And the spin from the CEO is that they're doubling down on these things and not watering them down. But it does seem like they're watering them down, making them more realistic now that it seems like it's something that investors care less about. And wanted to see what you thought of all this, because you follow these companies closely, and do you think this is going to be part of a bigger trend where there's just less focus on ESG?
I definitely think so. I mean, it's interesting that you even bring it up and thinking about kind of my writing over the last couple of years. There's about a year and a half ago when I first started, there's like all of these, even the technology, right? Trying to find the carbon footprint of supply chain and trying to bring that down. And I even see less and less of those type of press releases out there too. So I totally agree with the fact that I don't think the investing is going into that space as much as it has been, or has been a necessity. But also look back at some of the even regulatory bodies. I mean, the SEC came out, and clearly they're not going after or looking anytime soon to be, I don't want to say holding individuals accountable, but asking them for the reporting of some of these more sustainability areas as well. You saw California pull back, even if we're talking about the trucking side of things. So I think, especially when the economic climate is what it is today, and we're asking for as consumers prices to go down, or watching inflation, I just think it's gonna go on the back burner until the economy has kind of made that switch, at least for now. It is nice to see that they still are looking to obtain certain goals, and I think I wouldn't be surprised if some of those goals are, of course, kind of dual-sided, if not helping them in their long-term or longevity as well. But I just overall, I've seen it kind of fall off a cliff, which makes me laugh, because it was one of the areas I thought maybe we'd see more of this year. But as soon as this year started, I just felt like between California, SEC, so many, I mean, even I believe Biden pushed back, right? The administration pushed back on their goals as a country. So I'm not surprised to see it hit any of these companies as well.
Yeah, another interesting thing that Unilever said was they said that they would welcome regulations that apply to companies industry wide. So if there were certain regulations that everyone had to abide by, then they would be happy to comply with those.
Yeah.
And in theory, that would basically raise the cost of these products for everyone. I mean, you could argue whether that's a good policy or not, but it's hard for a company to implement something that puts them at a competitive disadvantage versus their peers, because there's a cost to all these things.
Well, and then on top of that, really quick too, we talked about this, I think, a week or so ago. Like consumers, as much as we will click on a survey that, yeah, of course, we care about our carbon footprint and where our products are coming from, our spending habits aren't showcasing that. We're
Mm-hmm.
spending even more in fashion and clothing than ever before. So, if the consumer isn't wanting it too, why would any of these guys change their habits?
Yeah, speaking of changing their habits, Americans are having fewer babies. So this is a topic that came out. I saw it yesterday, and every April there's this data comes out on birth rates, and I always find it fascinating because I think that this is something that really just has profound impacts for everything sort of throughout the economy, and particularly CPG, which is largely a function of how many people there are to eat, take care of themselves, et cetera. And declined another 2% from the prior year, from 2022 to 2023. It's down, let's call it 17% since about 2007, which doesn't seem
Wow.
all that long ago. But in terms of how much the rate of change here has been pretty dramatic. Birth rates now 1.62 about versus 2.1 replacement rates, sort of this continuation of a long-term trend. And it doesn't seem to be abating. And I think it's really sort of due to a combination, not just of higher cost of living and higher costs related to childcare and all of those things, but just really just changes in lifestyle and just less preference. But it really has huge implications for CPG. And so just sort of ones that I kind of brainstormed as having a big impact. I mean, it really makes investors less willing to invest in companies that would address the infant market. Like there was a big issue with the baby formula. Why were there only two companies when there was that big baby formula shortage recall? And it was really because it was just viewed as an unattractive market. If there's a decline, if it's a declining market, if it declines by 2% every year. There was one CPG company, I want to say maybe it was General Mills or Kraft Heinz, that said that if they could have done one thing differently over the past 20 years, it would have been they would have invested less in baby items and more in pet in the pet category, which has really been a strong growth area. So there's this big sort of shift away from that. The baby market also is impacted by regulations. Something the CEO of Reckitt, Bensiker, said that really has all this problems with litigation. But can you think of any other implications for CPG or retail?
Well, I will say, as a cat mom whose cat's literally sitting on her left foot as we speak right now, the pet aspect I think is a huge one, especially. I almost think that's more of like a replacement, maybe not an actual reasoning
Mm-hmm.
for it. I just think that in general, like you said, to start this off, the cost of having a child. I mean, even to take out the CPG realm, if we're looking at schooling, daycare, etc., healthcare cost, it really needs to be budgeted. And I think just in general, we're seeing people getting also married later in life. A lot of
Mm-hmm.
it's kind of being pushed back years as well. So it's interesting you talk about like the formula aspect, but yeah, I mean, 2%, you see that fall off so much every single year. Of course, they're going to spend less money in that. Plus, I will also say, I think there's also kind of like that movement in the background too of like when it comes to formula, whether you're using that or not. So that could be a part of it too. But as someone who's doesn't have kids now and it's would love to, but like not in the next 5 years, probably happening for me too. Like, I just think that one, the budget is a big area, and spending in other places is definitely I think top on everyone's list. So uh, yeah, it's I can't say I'm definitely contributing to that fall off. So and it's I think there's multiple reasons as well. You include like I said, the dating, the marriage statistics. Um, on top of that, just clearly the pet industry, and I don't want to say it's a replacement of having a child, but it seems to be doing that. I'm not too surprised to see those numbers where they are. I think just that family of like movement, right? Of like having kids, having one house, not the ability to travel, to move around, to I mean, look at renting, right? In a lot of places in the U.S. is better than even purchasing a home. So I just think the dynamics of society have kind of portrayed those numbers that you're pointing out today.
Yeah, so someone in the CPG industry who's looking at this really has to consider all of these cultural changes, and it's a gradual, change. Maybe not people are not stop having families completely, but it's still a dramatic change just from 15 years ago, really.
Yeah,
But I want to move on to the next topic here, since we only have a few more minutes. Is
yeah,
Wayfair? This is an interesting thing. So Wayfair is an online only retailer of furniture. And I've never shopped at Wayfair. I believe their furniture is pretty affordable. And now they're opening this huge, giant super center in, is it Wilmette, Illinois,
yeah.
which,
Mhm.
affluent suburb of Chicago, just north of the city. Familiar with that area? It's looked at the location where it's going to be. So it's sort of off the Edens Expressway. So easy to get there from if you live in the city, easy to get there if you live in the North Shore. So it seems to be targeting. I guess my main question here is: do you think they're trying to going up market with where they're locating this, or any other thoughts on the strategy?
Yeah, I'm 50-50 on the strategy right now. If we could bring up quickly the U.S. furniture and home furnishing sales over the past couple of years, clearly that's fallen off a cliff. So for me, I think there's a reason there's one store opening and one store only right now. They've had small stores open in the past, like 2021. All of them closed within a year. I think the big one on this one is just like you said, with the location and the product quality, I think, is improved with Wayfair as well. I think this is their opportunity to try to make themselves more of a household name, more of like an IKEA, right? Like, see, I think a lot of people buy the furniture off IKEA's website, but to have the opportunity to go in, check quality, feel the product, especially something like furniture where you're going to have people come. I mean, I actually do have a number of items in my house and just purchased things for my parents this Christmas from Wayfair. And even my mom was very concerned to get her lamps from an online retailer, but they turned out they're very nice and really great quality. And I think that's what this plan is to kind of get themselves out there, allow those who might not be comfortable purchasing furniture online to be able to see the products more, build up this name a little bit more. But at the same time, I think they really have to watch how they manage the stores, manage inventory. The big thing about Wayfair is it's a lot of third party sellers, much like you see on Amazon, contributing to the marketplace. So, of course, watching for quality, making sure that the stores have the inventory. But I do know that they do ship very, very quickly. So if something's probably not in store, it's probably going to be able to get delivered to you fast, anyways. But we'll watch this one and see how it grows. Again, doesn't seem like the best time. I would have maybe waited to see a turnaround in the housing market and attacked this, because I don't think you're losing out on any potential space when it comes to opening a big retail store as well. But I think this is kind of their move to mirror what they see from IKEA and develop a more of an experience. There's also going to be like a restaurant apparently attached to it too. So let's see if this gives them a little bit more of a reputation, a positive reputation within the furniture space as well.
Yeah, we'll see. I mean, they're going to have to really move the needle in order to justify the investment. Big store,
Yeah.
high in a prime real estate location. Warby Parker seems to do something similar, right? Because they were primarily an online retailer, and now they've seen some of their stores. crop up. At least around here, there's a couple, but be interesting to see for sure.
Yeah, if it was closer, I'd go check it out. I was telling Kaylee that earlier, so maybe there's an event I'm going to for FreightWaves, well, for Samsara. Maybe I'll try to sneak up there and see what it looks like.
Yeah, I'll go next time I'm in Chicago. I'll make that on my list. I'll go check out Wayfair.
Love it. Well, I think that's right there, out of time. So